Hello, everyone. Welcome. I'm slightly bleary-eyed. It's because I've been on a 4-day Blitzkrieg roadshow through Toronto and New York. I'm back here in LA now. I got back here at 2 o'clock in the morning on the last flight out of New York City last night, which of course was delayed. And so here we are. So thanks so much for joining. We've got some exciting news to share and to talk about in a bit more detail. And additionally, it's interesting, I was watching this morning, just doing a spot check on the last one that we did, which was on, I think, September 30th, so a little over 2 months ago, the last one of these calls that we did. And I said, well, I can actually make this investor call really quick. I can just say, go watch that one, and that's what we're doing, everything that we talk about. And that really is kind of true at this point. There's obviously some specific things that we can go into in more detail. But effectively, the first part of this presentation is really reiterating and recapturing much of what we spoke about on September 30th and sort of underscoring what we're doing in those places. So with no less prep, let's go to share my screen here. I've got Jace in the room in case there's any technical difficulties. Jace, should I go to 50%? Is that full screen for you?
It looks good.
Looks good? Okay, well, hopefully this looks good for the rest of you. So we'll follow the same format that we followed on these calls in the past. I'm hoping actually to do another one of these very specifically about the India business. I haven't picked the date or exact time yet, but Scott Patterson, our chairman, myself, Jace, our Canadian-based CFO, and the key management team from India. Andy, I saw you were on. I haven't invited you yet. We can talk about that offline, about whether you want to join us in an offsite that we'll be doing in the third week of January of 2022. We did the same thing back in, I think it was July of this year. It was extremely valuable for us in terms of staying on track and executing against what we basically agreed to execute on. And so we'll be continuing to do that. But let's jump in here. These are the usual forward-looking statements and disclaimers. And most of you will recognize this as just an updated version of the slide you saw last time. As I said a minute ago, the bottom line is that we're basically have been deeply in the weeds executing against everything that we were talking about executing back in the fall of this year. What I really want to do today for the presentation is I just kind of want to restate, if you will, what's happened in 2021. It's been a transformative year for us, as pretty much everybody who's on here likely knows, as a business. We look to continue that. There's a lot of activity going into 2022, which isn't really going to stop. That's going to drive a lot of the initiatives that we have for growth in 2022. And so, hopefully I'll blast through a lot of this because I'm going to make the same assumption I did last time, that most of the people who are on this call are quite familiar with our business and what we're attempting to do here and executing against. And also this entire call will be posted up onto our YouTube channel with, I believe, a link that we'll post up to our website. So if anybody misses it or you get asked by someone about it, Jason's nodding his head, then I think it takes about 24 hours for us to process this, but you can figure that tomorrow you'll be able to go back and see any of this along with the presentation, et cetera, up on our website. So where are we? This is exactly where we were 2.5 months ago, which is that the macro themes that are driving our business continue, and they all continue to grow. I don't think I have to educate anybody about what's happening in the world of social video and how explosive the growth is there. I mean, truthfully, the TikTok, Snap, Instagram, YouTube markets and the rest, Twitter, et cetera, they're just part of the fabric of the daily lives of everybody, regardless of whether you live in North America, Europe, or India. It's a global phenomenon. I sometimes state the statistics about it that I find fascinating with respect to our business in India, which is that Facebook remains the largest territory in the world in terms of users for Facebook. 10% of all views of YouTube content that occur on a daily basis happen in India. I think that's incredible, actually, that 10% of all content viewed is coming from there on the YouTube platform. As I probably mentioned before, TikTok, before the Indian government banned them, that was probably their single most important territory for growth. That's now spawned about 3 or 4 different platforms that are basically TikTok knockoffs in India, most of which we're engaged with on some level. And so there's just no denying the power of that marketplace in terms of what's happening there. The other side of the slide, of course, is what's happening around the creator economy. Mark Zuckerberg, when he announced the change of Facebook's name to Meta, literally used the terminology creator economy in his speech about that branding shift. And the creator economy is becoming essential for certainly anybody who's 30 years of age or younger in terms of not just daily engagement, but probably most importantly in terms of daily transactional value there. That transactional value continues to grow massively. When I was on here 2.5 months ago, I had just announced that Meesho had gone from a $2 billion valuation to $4.9 billion that day. And Meesho continues to grow there along with a host of other businesses that are all engaged in the social commerce world. So these macro themes, and India with their youth, India with all of the areas that they sit as a leading business area there, and the creator economy and social video part is obviously affecting the US business here in Los Angeles, our influencer marketing business. All of these things are driving us up. Nothing is changing there. Nothing is happening other than upward momentum. And so we feel that we're incredibly well positioned, as we've stated before, and nothing has changed to cause us to think differently. This is another slide that we shared on the last call. I am not, to disappoint some of you, sorry about that, I'm not going to give any formal guidance, but you'll probably be able to do the math and figure it out yourself. I'm not going to give any formal guidance for the quarter that we're in. Primary reason behind that is there are still some revenue recognition areas that we're uncertain of even this late into December about this quarter. What I can tell you is I made a note in basically March 31st, I think was the actual date when we originally gave our guidance, which was the first time we did that. It ranged from 9.3 million to 10.9 million. We upped that guidance, as you all know, and essentially plus or minus for this year, for calendar year 2021, we'll do roughly $13 million in total revenue. I can see some of you are probably taking your calculators out already. The reason I said this year is because another thing that I spoke about on the last call was our fiscal year. We have formally made the decision that we're going to proceed with changing our fiscal year to calendar year. As I expressed before, been extremely, I've hated the June 30 fiscal year end. I've always operated my businesses on calendar years. We don't have a cyclical thing that affects it that much, so that we're going to be making a change in 2022 where we will start reporting on a calendar year basis. I can't give the exact dates of when all that transpires. We've already had the meetings and started that in motion. But what I will say is that with $13 million of revenue in calendar year 2021, we are on basically a trajectory now, plus or minus $24–25 million on an annualized basis. And you can expect that our trajectory growth will continue at a pace that will be very high throughout 2022 and beyond. So we're expecting this revenue growth, not necessarily in an exact, percentage basis on a quarter over quarter, but we're expecting to have continued very strong quarter over quarter and annual year to year revenue growth. And there's nothing that's changed with respect to this from our perspective. I'm sure there'll be some questions on this. Again, I'll take questions at the end of the session. So what I want to go through now is just a quick recap of what's happened this year. because it's very easy even for us to forget about the dramatic change that occurred in our business. Literally a year ago today, we were all excited about getting to 3GRP or 4GRP, and that was in our quest to catch up to these other youth channels on the broadcast side in India that I've spoken about many, many times. Our average rating since March of this year is 38.8 GRP. I also get asked about the GRP a lot. We've dipped a little bit. We're now hovering pretty much into the mid-30s in general. I'll talk about that in a little more detail in a second. But the entire viewership for all Hindi GECs has dropped as a result of COVID sort of passing. I know it's coming back now, but sort of passing in India, and less viewership overall as a result of people kind of going back to work and getting back out into their normal daily lives. With that said, we've remained almost exactly where we've been all along relative to other channels. We're still higher rated than channels that are owned by the big boys there, by Star, by Sony, which is now becoming Sony Z or Z Sony or whatever they're calling it. And so in terms of our channel placement in the Hindi GEC area, which is general entertainment channel area, we're still in that 8th to 10th place channel among all of those channels that are rated in that area. That's just spectacular growth. We never, ever, ever imagined that in 2021 we were going to reach that level and be able to maintain and hold that level. So we're doing that. We just launched a big marketing initiative for the channel, which I'll speak about a little bit more in a second. So we're extremely proud of where we've landed, and we're continuing to leverage that in many ways on a go-forward basis. The last time we spoke, I spoke about adding 30 new advertisers this year. We've added 50 new advertisers this year. And as I stated before, we used to make press releases about that. It's kind of expected now, I guess I'll say, in terms of what's happening for our business. And this not only has a huge impact on our Hindi general entertainment channel, but obviously this is going to impact the launch of any new channel or channels that we'll be putting out on a go-forward basis. So the relationship that's been created by Simran Hoon, who was in a very, very large way hired for her expertise, knowledge, and relationships in the area with agencies, brands, et cetera. That's already paying dividends, and it will continue to pay dividends on a go-forward basis as we drive the level of engagement of those advertisers and the value that's being produced and the revenue being produced by those advertisers going forward. You know, we talk about our mass distribution to 800 million. We're about 130 million plus television homes, which is where most of that revenue growth is being driven. And as I've said, we haven't really tapped into the digital side of the business and the monetization of that, which is a massive priority and super important priority for us in 2022. And the process of doing that has already started. We also have launched a lot of new programming. Some of that new programming hasn't worked. Scott Patterson, our chairman, when he calls me on the phone, always says bad news first. The bad news relative to our programming is that Ashram, the show that I was touting on the last call, failed. It did not perform the way that we wanted to. That was the bad news. The good news from that was we found out exactly what our audience didn't want. We actually commissioned what's the word I'm looking for? Gosh, I drew a blank. A study of what was happening with Ashram that we had done, frankly, to find out what people liked about Ashram and what we were going to use coming from that to move forward. We found out exactly the opposite. We found out from that study what people didn't like about Ashram. It was too heavy. It was too dark. It was not what they were looking for from the Q. They were looking for the Q from the people literally said that they considered Q to be their friend, and which is fantastic. And they wanted lighter hearted stuff, more comedy, more animation programming, more shows that were not kind of going into the darker area that they could see on other channels. We've pivoted from that lesson in a huge way in terms of all of the programming that was under development at that time, including the programming that we were looking and are looking to license from partners like MX Player. And while we were battered and beaten for a short period of time, for a month as a result of that, there could not have been a better fast failure lesson for us as a company than what we got provided by that process. And so we're rebounding from that in a big way in terms of what we've got planned from a programming point of view. And we're already starting, and when you get to the link, I probably won't share it on this call, but you'll be able to see a couple of our advertisements that we're now beginning to launch as a result of our relationship with Times of India and our push into marketing and branding that we've spoken about. You'll be able to come back here and watch a couple of the commercial spots that we're now running on other channels and on other mediums, which you'll see is lighthearted and comedic in terms of what we're pushing. The other thing in 2021 was the acquisition of Chatterbox. I've talked a lot about that and our 1 + 1 = 11 theory about that. Well, that's bearing fruit. Chatterbox continues to grow. We continue to find great synergies between what we're doing on an ad sales basis and our quest to get into 360-degree ads. That's all happening. That's going to happen in a big way for us in 2022. And there's nothing that's happened. Chatterbox is executing and delivering more than what we even expected to happen there when we originally made the transaction. And the QUSA influencer marketing business is growing. We've actually got most of them here today in the office, outside my office, that are planning for what we're doing in the first quarter of 2022. It's delivering its third consecutive quarter of over $1 million of revenue. It's growing in terms of the categories. We're hiring more people there. And some of you may have seen that we recently announced that Glenn Ginsburg is now the president of QUSA. You can take that as kind of like with Simran Hoon in India, a sign that we're planning on doing a lot more with the US business in terms of growth in 2022. So you'll see a lot more coming from that business as we go forward. The Times of India brand capital investment wasn't just the investment that came in there. It was about the relationship with a company that is the largest media company in India and able to be a strategic partner for us there. That's from a previous slide, but there's a lot we'll post onto our Telegram and our other social media, some of the recent things that have happened in terms of promotions around Times of India owned properties. But additionally, the quest that we've spoken a lot about of building a brand and the intangible value of having a youth brand, a new brand in India that no one else has, is where there's tremendous value upside for us and for all our shareholders. So we'll also post onto some of our social media channels a recent article that just came out this morning, actually. We'll get that up there today. That talks about, through a lot of B2B publications in India, about our first brand campaign, which is literally just launched there this week, which is an overall and the largest brand campaign effort that we've done since we started the business in India. Finally, I still get asked a lot about our social numbers. And I think one of the investors who's on this call, I apologize, I think I owe you an email response, but I'm backed up right now. So what I don't think it's realized sometimes is that our model up until now, and we'll talk about how that's going to change a bit in 2022, has been to ride on the backs of other people's platforms in terms of building our brand and building the community around people that are watching Q content. Even since this slide was created, we continue to grow, and we're pushing up against 1 million subscribers now across the 4 channels that we've created, or 4 independent content sites that we have on Snap India. It's amazing. And that's with very little promotion. Most of that is organic. And we continue to feed into that to grow the Q brand and have a great relationship with the people at Snap India, and look to continue to do that. On Chingari, as I've spoken about before, we're pushing up against 500,000 people on our channel there. I think I spoke last time about the fact that we did a promotion for a audition for one of our shows. We had almost 50,000 auditions submitted to that, and over 1 billion views of that. The monetization around that, to echo where that hasn't happened, is Chingari isn't monetizing yet. They're sort of following the same model of frankly what TikTok, YouTube, Facebook, Twitter, we've long since forgotten that none of those social platforms were monetizing themselves when they first rolled out. Chingari is doing the same thing. So there was no monetization of that, but there's great brand equity that's gained for that. All of these things were accomplished in really since March of 2021. And sometimes it's easy for me and for all of us to forget that there's a tremendous amount of activity that's happened over the last 6 to 9 months to put us driving into 2022 in a completely different level than what we were less than a year ago. As I mentioned, I'm not going to play this right now. I'll suggest that we'll put this up on the website. We'll post this in other places, but this is a sample of the actual 30-second ads, which is the first time we've done this. They're in Hindi, so you won't be able to understand it, most of you. But I think you'll find just the visuals and you'll get the idea of what's happening. And we'll post again the print articles about the fact that we are driving a much stronger move right now into creating a Q brand than we ever have. So let's get to 2022, because this is what I know everybody's most interested in. We announced very specifically a few weeks back the fact that we're launching Q Marathi. Some of the things that are key to the Q Marathi that you have to realize is not only is the Marathi audience 84 million strong of native speakers, which puts it on par with the largest company in Europe, as an example, Germany. But Q Marathi is also the most sought after. The Marathi language group in Maharashtra in India is the most sought after language category for advertisers and brands. As I mentioned a minute ago, because we've got such powerful relationships now with brands directly and with agencies, we're very, very bullish on our ability to move a lot of those people over onto the Q Marathi channel coming out of the gates. So we've announced the date for that. January 31st, 2022 is when we launch that channel. The promotional push behind that begins right after the new year. And we have a format that we know works. So we're super excited about the potential of the Q Marathi channel. In addition to that, we're going to be launching another channel in Q1 of this year. Not trying to be coy about that. We spoke about that on the last call. I'm not going to give any details about that today, but we will definitely have another channel, which we're also very excited about going forward in Q1. I think the point of all of this is that if you went back and looked at the September 30th shareholder call, I actually was reminded this morning, this is exactly what we said we were going to do. And part of what we feel we need to do as a company to build shareholder trust and shareholder value is delivering on what we say we're going to do. And so we feel like we've done that in 2021. We expect to do that on a continued basis in 2022 and beyond. And I think part of the cornerstone of all this is, again, building what we've been talking about this year, which is a real media entity that has value across a lot of different segments in India. That we're not a one-trick pony with just one Hindi channel, and that's where we're going to sit and just keep doing that. Obviously, we're going to continue to build and grow the value of that channel. That goes without saying. But we're going to also leverage that, and that's where the investment into the business is key right now. If we were a private company, we could just sit and sit on the Hindi channel, keep that there, not worry about sort of the revenue trajectory we're looking for and building into more things. We're investing in the business right now. We think that's to the benefit of all shareholders, including ourselves as management. And it's the smart thing for us to do because we're in a category and a space with momentum now that can make that possible. So can't give you an exact date. But look for more information. Maybe it'll come if we do a live broadcast from India when we're over there, is when we'll reveal the details about that, maybe even sooner. I'm not sure right now, but we're definitely 100% launching another channel, which will be a unique channel. I can tell you that, and that it will be a different approach slightly than what we've taken in the past, but we're also equally excited about the potential of what that channel can be for us on a go-forward basis. The other thing that's happened for us is we're doubling down on our push into tier 2, tier 3, and rural markets. If you, there's some links that we'll provide at the end of this presentation to a lot of articles that are about what's happening both in India in general, in the venture-backed area in India, and the creator economy in general. And if you look at those and take time to look into any of those, you'll find out that a lot of the investment and capital that's going in, it doesn't matter whether it's from the big boys, the Googles, Microsofts, Netflix, Amazons, et cetera, in terms of the billions that they're putting into the marketplace, or if it's in the venture companies like Sequoia and Tiger that are also pouring billions of dollars into India right now. You'll see that about 70 or 80% probably of the businesses that they're doing that for have a target into the tier 2, tier 3, and rural markets. It's the place where the so-called, billion next users are in the India marketplace. And I've stated over and over again that I feel that what's going to happen in India over the next 2 decades, which my statement of that should give you an idea of how we look at the longevity of this business, that happened in China over the previous 2 decades is going to happen in India over the next 2 decades. And so this is a hugely important part of the focus of the team, of the channels that we're building and launching, of the targets that we're going for in terms of the kinds of campaigns that we look to be running around both the channel business and the creator economy side of our business. And so 2022 is a year where you'll see a lot that will happen across those areas. The next move in 2022, we just announced that we partnered with Mazzalo. For those of you that might have either missed that or are not familiar with what that's all about, this isn't a Me Too, by the way. For any of you that are familiar with Jace from Telegram or any other social areas, you'll know that Jace has been a proponent of the crypto and blockchain and gamified aspect of where we need to head for a long time. The other thing some of you may be aware of is there's still a lot that's up in the air in India around what the government's going to do around the area of cryptocurrency and how that's all going to play out there. With that said, pretty much everybody's aware that this area, whether it's on NFTs or other crypto and blockchain businesses, is on fire. We expect that to continue. This isn't a fad. This is a real business. This is going to be part of our lives on a regular basis. So there's no doubt in any of our minds or management's minds about that. And so we partnered with Mazzalo to dip our foot into the pool. Mazzalo is a platform where they've created what's called the Mazzalo Wallet, where you get rewarded for viewership. It's a free app-based platform. And if you watch Q programming or a 2-hour movie or whatever it might be, you actually get Mazzalo coins that drop into your wallet. What is that good for? They have almost 600 different brands and advertisers that are part of what you can use that as a rewards-based system for discounts on products and services. So you've got your Mazzalo wallet, you watch 2 hours of Q programming, you get 10 Mazzalo coins into that wallet, and then you go to Starbucks next day and you're able to use those Mazzalo coins to get 10 rupees off your, I'm using it as an example, don't take that literally, 10 rupees off your coffee that you get at Starbucks today, or a 20% discount on the Adidas tennis shoes that you're buying the next day. So that's it's a very cutting edge platform. It's based on the free model. We're huge believers, as we've said over and over again, about the free model, but you can just make the assumption that this is something that we're going to continue to develop in 2022 in a much more aggressive fashion. The supporting business underneath Mazzalo is a company called Exfinite. Exfinite has about 600 of the coins. They have 4 billion coins, and I think their market cap is roughly $600 to $700 million US dollars right now based on the value of those coins. That's the technology and platform that sits underneath Mazzalo. You can pretty much make an assumption that we're in deep conversations with Mazzalo about various ways we can work together, which all relates to what's over on the right-hand side of this slide. I spoke about this last time, and I'll speak about it a bit more specifically today. We are focused because of the fact that this business is all built around a youth-oriented brand. It's all built around free content. It's all built around where things are going, not where they are. And we believe in all of that. India is at the very beginning. When I spoke about my baseball analogies, I think I said the other day, I think we're entering the fourth inning in 2022. Well, we're in the first inning of what's happening in this game. I think the world is as well, but we're going to be very aggressive about how we're going to play in this space in India. There's a huge amount of capital moving into the India marketplace around all of this right now. And what this will ultimately lead to is we've actually hired people now in-house that are working on Q apps and the rollout of Q apps that'll be direct-to-consumer apps that use this type of technology and this in a certain way. The second bullet here on the right talks about Q formats. Q Labs has been initiated for us to develop things around the blockchain, crypto, gamified, and interactive elements of what's going to happen here. And again, what I'll say in addition that I think is very important about this, the revenue projections that we have internally and the revenue growth and trajectory for what's going to happen in 2022, and even to some extent 2023, is very small with respect to this. And in 2022, it's basically zero. But in 2023, it's still a small percentage. Most of what we've built into our projections around this happens 2, 3, 4 years from now. But we think it's important that we get into this space, and we think when it does catch fire in India, which will happen quickly, that we want to be already on the train and moving with it. So there's a lot of investment effort, a lot of activity, a lot of thought process that's going into how we're going to position ourselves in this space on a go-forward basis. You can look at Mazzalo as our first move into this and getting serious about what's going to happen there. The other biggest thing that connects to this, obviously, is social commerce. I spoke about this as well on the last call. Again, we're sort of playing it close to the vest in terms of what we're doing in this area. But suffice it to say that where we reach 100 million people a week in India right now, with the new channel launches that we'll have in Q1 and some other activity that we're going to have on the digital side, I expect that should double on a weekly basis by this time next year. So when we have, as I call it, our ground speaker and our loudspeaker that's driven by social content and social stars, and what we just spoke about on the previous slide about sort of our move into the apps-based business, you can just assume that in 2022, a move into a more transactional relationship with our audiences is going to happen. As I said at the very outset, part of our role here is to make promises that we deliver on. So I don't always want to reveal, and it's not appropriate, nor could I reveal every last detail of what's happening. But this area in 2022 is one of the primary growth areas that we're investing capital, time, and energy into, because we believe as we move forward and as the India business grows, that this will be critical to that growth in the outer line years. On the US influencer side here, the meeting that's taking place outside my office right now is being driven by what's going to happen for us to expand beyond the segments we're currently in. We have tremendous success right now in the movie studio and entertainment space. We've started to leverage that further into the gaming space, which sits adjunct to that. But we've hired some new salespeople that have expertise in new categories that we're not in. If you follow this at all, and you'll be able to look at some of the links on the articles that we've included in this, there's not a brand on the planet Earth right now, unless they're frankly just stupid, that doesn't have a influencer-driven part of their marketing strategy on a go-forward basis. If you do any research and look into the creator economy at all, you will absolutely positively see that all brands are moving into the direction of promoting themselves on TikTok, Instagram, and other forms of social media. Well, we sit right in the middle of that. We have great expertise here. A lot of the learnings that we've had around that are being transferred to the Chatterbox group. Our QUSA group and our Chatterbox group are working more hand in hand every week. And our TV ad sales group and linear and VOD ad sales group in India is doing the same with Chatterbox. All of this is coming together in 2022 to be a powerful and unique force for the way that we can drive our brand and our revenue growth. And there's nothing that's stopping us right now from continuing to build and make that happen. What sits underneath that is going to be a continued aggressive M&A strategy in 2022. I can tell you that right now as we speak, I'm talking to, I don't know, maybe 5, I guess, different companies about that sort of thing. None of those, I'm not going to predict when and if any of those are going to happen, but I will tell you that I expect to have 1 and at least 2 M&A events occur in 2022, because we, as I've said before, you know, I've talked a lot about our lineage with Lionsgate and our great respect for the management that built that business into what it is today. And it was a combination of them having great organic growth through their core businesses of motion pictures, television, and home entertainment, but bolting on to that other companies along the way through M&A that accelerated that much faster than what they could have done organically. Scott Patterson and I, Andy Kaplan's been involved with Lionsgate, Steve Beeks is with Lionsgate. You know, you can't look at our management team and not think that we are connected to that same mindset for what we're doing with Q. So look for us to do that in a very, very aggressive way in 2022 and beyond. We're not going to do it stupidly or in any way that's not going to get value out of what we do. We feel we can be choosy right now because of the great organic growth, but that's very important to us. And finally, what I spoke about is you'll look at the ads. We have so much more activity happening on the branding side in Q4, and you can look that to accelerate in 2022 as well as we build they're already, you know, look, if we had spoken a year ago, I think, I don't know, maybe we had 3 or 4 million people a week that were getting exposed to our brand in India. It's now over 100 million people a week. So it's a quantum difference. And I would, you know, say it would be unlikely at this point that anybody 30 years age or younger, you know, might not have an idea who the Q brand is. And we look to build that in a major way in 2022. This will be on what we'll publish. So when you, obviously it won't be on the video, but if you download this, when we put it up onto the site, I really encourage anybody who's a strong follower of what we're doing here at the Q, you know, in 30 minutes or less, you can get a quick education on what's happening in the creator economy space and in the India space. There's just a massive amount of momentum in terms of what's happening there right now. I think everybody's probably aware that there's a lot of issues that people are concerned about coming out of the Chinese market. And I think a lot of the capital and a lot of the interest from the investment community, both the public investment community and the private sectors, is going to move into the India business. As I mentioned, I've been on a bit of a roadshow with investors and other people. Some of you, I think, saw my photo yesterday from New York City. We're having a lot of discussions about ways that we can get U.S. investors more engaged with what we're doing with the Q and Canadian investors. And you know, we've got our wonderful following in Denmark. So thank you to all of you there that are following us and supporting us. But there's just a tremendous amount of momentum right now that has nothing to do with our business. It has to do with the global investor community and what's happening in India. We're going to ride that wave. We think everything is pointing up for us right now in terms of how we can leverage that. And so you'll see us putting the pedal down hard. Part of my job, as we've added more management, is that I can start to focus on this part of our business a lot more than I could for the last 6 months, which brings me to this. You know, some people will say that a company is really their people. And a year ago at this time, we had 22 people in the entire company. We now have roughly 100, a little over that, I think. We haven't added those people because we just want to add people, obviously. We've added people that we believe can be extremely valuable to us in growing the brand equity and the financial growth of the company. And we now have real teams and real professionals and highly skilled and trained people that are driving this growth. Frankly, that's going to allow me a lot more time than I've had in 2021 to put my focus back onto the investor and financial markets to be able to expose us out to a lot of people who don't know who we are. And I'm talking about in the investor community. There's a hell of a lot more people out there who don't know who Q Media is than who do know who QU Media is. So a big priority for me is to lean on this team of executives, some of who've been with us for quite a while, some are new additions, but people who are all built to build businesses, and they're successful and they know what they're doing, and the proof is in what they've done so far, and we expect them to continue to grow that on a go-forward basis. So I'll be leaning heavily into management in 2022 that we haven't previously had to execute across what we want to do as a business. And the final thing is that we do have a veteran board in terms of experience of people that have been in the media space, the technology space, built companies. Catherine Warren is now head of the economic, what's called Innovate Edmonton, which is the economic growth government agency there to build new tech businesses, new investment into the Canadian marketplace. Andy, as I mentioned, was part of the meteoric growth that occurred around Sony Television as they went into territories around the world, with one of the crown jewels of that achievement and value being driven by what happened in India. So we're super excited about where we sit as a company heading into 2022. There's really honestly kind of no way to compare where we were 1 year ago to where we are today. I can tell you that with that said, I'm expecting to do the same level of growth in 2022 and beyond that ultimately. But the focus right now is what's going to happen for us in 2022. How can that appreciate the stock value for all of us, myself included, and management and board included. Everybody's in this together in terms of our motivation to be able to make that happen. And nothing that's taking place in our business right now has done anything other than continue to grow our belief that we can make this all work. And so I'm going to plan, I've already started it in December, but to hit the ground running in January with a strong push to gain more investor visibility for what's happening with our business. And we expect that ultimately, look, there's a hell of a lot of downward pressure on every small cap and micro cap stock right now. I don't really, I think, follow one that's not dramatically lower than what it was back in the spring. And certainly getting the pressure of tax loss selling and all those other things that occur in December. So we'll get through that. The key to this is not about what happens in 1 month. It's about what happens over time. And the bottom line is that without a strong business that's delivering and performing, that we're not going to get that to happen under any set of circumstances. And that's what we've got right now. So with that said, tried to leave 15 minutes here for some questions. I'm going to stop my screen share. This will all be available, as I mentioned, through the various channels. And I'll go in here. I'm going to go into the chat and try to see what we've got here. Someone asked Greg about CapEx. I wouldn't really, the question is about the percentage of revenue or profit that can be applied to CapEx going forward. I think the most important response to that is that we're sitting around, just hovering right around $8 million of cash right now. A a lot of people were thrown off by our last quarter where we had a lot of non-cash that was in the loss of share-based compensation and some other non-cash compensation. We burned about $900,000 last quarter of cash. That includes investment into all these new things I'm talking about: channel launches, human capital, branding, et cetera, et cetera. So, I could sit here and say, okay, well, we think that's going to keep getting better. So let's round up to $1 million and say we're sitting at $8 million. I could sit here and tell you that we can get as an overall business to cash flow break even. And we certainly are not in a position where we need to raise a dollar in calendar 2022. With all that said, I'll repeat that the goal right now of management board, and we think what's in the best interest of our shareholders, is to grow our business. We would have a very different eye on that if we were not in the position that we were in and we weren't sure whether what we were doing was working. We weren't sure if the macro themes that surrounded what we're doing as a business were growing. And we'd have a lot different perspective, I think, on where we were going to take the business if that wasn't the case. Some of the businesses that we're competing with in the social commerce space, as an example, are working with capital treasuries that have $100+ million in them that's earmarked for growth in that business. It's hard to compete with those in terms of what's happening there. So we're going to be smart about it. We're looking, when I talk about various companies on an M&A basis that we're looking at right now, we're obviously not going out and looking at a company that's going to cost $5 million of cash to do that acquisition and drain our cash right now. At the same time, we're going to look at companies that can structure things that can grow not only our revenue, but our move or ultimately towards being EBITDA and cash flow positive. So again, I'm not trying to be coy about it. There's a lot of regulatory issues, as I'm sure many of you are aware of, with respect to providing formal guidance. We're not doing that yet. I'm not going to sit here and say, I like that Q mug, Gregory. I'm not going to say yet that that we're not going to deliver guidance going forward at all, but there's a lot of moving parts right now. So we're looking at that very carefully because the goal here is to underpromise and overdeliver, obviously. So I hope that helps answer that question. I'm sorry, I'm going back to the top here. Amazon missing, or am I missing something? I think whoever asked that is referring to the advertisers. No, it may just be that Amazon's not on there, if that's what you're asking. Would love to hear what Ken Silverman and Lyle Heimbaugh think. Smart professional. I can speak for Ken, unless Ken, we don't let Ken, we can't let Ken get started. I see him there on talking about us, or otherwise we'll hit the 12, the 13 minutes will be gone. So Ken is a big supporter of the company. He has been since we met several years ago. I can't speak for Lyle, but the concern is the growing float. Yeah, look, we know we've got a big float. We're well aware of that. As I said on previous calls, there's a lot of different directions that we can head as a company right now in terms of what we're going to do on a go-forward basis. I've stated before, we've looked at everything from uplistings through a variety of ways that we might go with the business. We have not made any decisions yet. We're actively discussing all of it. It's part of why I was in both Toronto and New York. So that's the tease picture on Telegram yesterday was really just to indicate that we're in those discussions. I'm not just saying this, we're actually doing it. What we're going to do and exactly when we're going to do that is yet to be determined. But we don't love a lot of the options that exist for us at 25 cents. So we're still contemplating what the timing is. I think that we're going to have some news and other things that will come out in 2022 in Q1 that will help drive that. And maybe the markets in the small and micro cap area will help return to a stronger position than they are today. As I said, look, misery loves company, and we're very unhappy and think we're very undervalued as a company. but we're not the only small cap company that's suffering right now. We're far from it. There's a very short list of those that aren't suffering from what's been happening in that space over the second half of 2022 and even more so over the last couple of months. So buybacks, things of that nature, everything's being looked at right now in terms of what we can do to help grow the business on that regard. Roughly, hang on, it keeps bouncing to the most recent. I'm trying to go in order here. Stock price won't go up. Yeah, I kind of just answered the next question. Just, you can assume that we are looking at various market listings and various opportunities that can exist for us to drive two things, both greater volume and value for all shareholders, but also a greater and more active following. I mean, I don't know whether they're on the call or not, and I won't say the names, but I'll just mention that someone's brought to our attention and it's still unsolved. It's why I believe it's Scotia iTrade. You can't even trade QU. We've had conversations with many investors. There's a lot of investors we talk to where they just can't, they're not allowed through their funds to trade stocks that are penny stocks. It has to be at least $1, in some cases even $2. Well, that sucks because there are people that would want to invest into the company, but they're literally held off from doing so. So that's frustrating for all of us. It's not where we want to be. As I said before, I think, I've said this over and over again, if I walked into a venture capital office, there have even been discussions that we take the whole thing private. Don't worry, we're not going to do that. So there's been a lot of discussions that have taken place about the way to find the greatest level of shareholder value. We're all in the same boat on that. But the driver that I spend most of my time in 2021 on was solidifying where we're heading with the business. The number one way that we can provide shareholder value is making sure that we have a high growth organic business. I'm shifting my own attention, as I said, going into Q1 of this year into becoming much more active than I've been able to be on the investor front because we've been too busy with this other stuff. So now that we've got management in place, I'm going to turn my attention to that. And we're not just going to stand still and stay where we are. So I'm sure something's going to happen in 2022 that hopefully will help all of that out. These are all sort of the same questions about the float and dilution. Someone's asking specifically about NASDAQ and new NYSE. When can that be expected? Again, I kind of the same questions, same answers that I've just given you. We're looking at everything. So what's really happening, someone's asking a question about Chatterbox. The influencer business in India is growing massively right now. There's a number of transactions that have taken place where companies have bought influencer marketing companies since we purchased Chatterbox, and I expect that to continue. The most amazing thing for us, sorry, I'm looking at questions while I'm talking, the most amazing thing for us is the ability to start to integrate and the I guess I'll call it not the ease, but the synergies of integrating the Chatterbox business and team into what we're doing on what was the Q Media team. So that's going to also improve and grow in 2022. And like this offsite that we're having in India in January, I mean, Pranay and Julie are both part of that. We actually shifted the dates on it to make sure that we could have them attend that. They're part of the overall management team of India now. And a lot of the new initiatives that we're looking at in the app-based area and the social commerce-based area are being driven through efforts that are happening with Pranay and Julie and Chatterbox in general. So the integration of that into our business in India is super important and something that's growing. Someone mentioned a Bombay listing. Yeah, absolutely. Again, that goes on to the list of different things that are being reviewed and considered. I think I'll just say it again. We're not going to be hasty and do something that's a knee jerk around that right now. We've been talking about it for a while. We've been looking at it for a while. And I'll just make the statement that other than visiting with specific investors and supporters of the company, the Toronto and New York trips were, in large part based around what next moves make sense for us as a company going forward in the public markets. Um, Again, I'm not going to give guidance right now. Expecting Times of India to invest in Q1 2022. My answer to that is that honestly, I don't know. But if I'm to answer the question expecting, I'll say that we have a great relationship with Times of India. We've been firing on all cylinders in terms of leveraging that relationship to promote our business. And I would say that my expectation would likely be yes, but we'll see. You know, I certainly don't have any indication of that. They have until March 31st of 2022 to make that decision, and we'll see how things transpire. But we certainly have a very solid and growing relationship with the people at the Times Group. You know, another question I have here is on institutional investors. Look, it's very difficult for institutional investors to invest in penny stocks. It's really a battle, and this is for all penny stocks. So we are, you know, when you look, and people I know are fearful of rollbacks and all these other things, you know, we've got to look at that in the context of what kind of investors we can attract as well. My opinion, I'm not sure why, honestly, and this is my opinion, I'm not sure why people are always so worried about rollbacks, frankly, because for me, it's like, okay, it doesn't really matter. I think one of the reasons people are worried about rollbacks is because typically they happen when companies are in trouble or there's a problem or they need to do that. And happy offline to speak to any of you, you know, who want to reach out to me about what your concerns might be about that, because I'd love to understand it, frankly. The key as well is that if you were to look at anything like that, you've got to keep an active enough float so that you've got, you know, velocity in terms of the trading that happens. And obviously you don't want to get somebody who comes in alongside that and then just whacks the stock. So we're aware of all this stuff. We have a very sophisticated, much more sophisticated than me, group of both investors, advisors, and people to look at all of this. For obvious reasons, as a public company, I can't state, you know, I wish I could talk about more details about specifically what we're looking at, timing of that, what might happen, et cetera. The truth is we actually don't know the answer to that, but I can just make the generic statement that any and all opportunities that ultimately can take the market cap of this business to a much, much higher level than where we are today. I know it sounds silly when you've got a $100 million Canadian market cap to say we still believe we can be a billion or multi-billion-dollar enterprise. Nothing's changed on that for us. We believe that we're way undervalued right now in terms of what we have as a business, and so we'll see what happens. But there's a lot of momentum that we are part of right now, and there's no indication of any of that changing. You mentioned hitting the fourth inning. That's when he says he gets a hot dog and a beer. You know, I think the thing that I'm most excited about right now is that the revenue growth that we expect to happen in 2022 is based on businesses that we are in right now. Everything that's going to drive a substantial increase in revenue in 2022, we're already doing. There's nothing new that has to be launched around that. Even the channels that we're talking about, the delivery of revenue from those channels in 2022 is very small. It's really about the future. So nothing that we're baking in, and again, I can't share our projections for the next. We have a 5-year projection through 2025 internally. Nothing if that really is based on a blue sky home run from any of these new things we're talking about around social commerce or app-based content or crypto or any of these things that we're suggesting that we could do, or frankly, even a transformative acquisition that could happen along the way in those outer years. So we think that there's a tremendous amount of upside. I've kind of chosen to get out of the business of over-promising and under-delivering. I found out that doesn't work very well. So I'm trying to get into the business of under-promising and over-delivering at this point. I think we'll do that in 2022, and we'll see what that happens and if that comes true. But I know what our target number is for 2022. It's substantially above where we were this year, and I expect that we're going to deliver on that and then some. I'm going to end this now. I want to wish everybody a happy holiday and happy new year. The next one of these calls will happen in all likelihood when I'm over in India, and I think it's the third week of January. I appreciate, as always, the following, the support, and don't hesitate to send me an email directly or through the investor part of the website, and I'll do my best to answer your questions the best I can. We'll get through this dip in December, and fight our way through that. And I think you're going to see a lot of good things to happen in Q1 of 2022 and beyond. So thanks, everyone. As we say in India, namaste, and look forward to seeing you all in the new year. So thanks all.